Hi, everyone. Wednesday, August 31st, where we're going to do the Mortgage Minute, where we're covering what's going on with interest rates in about a minute. And yes, this is a Wednesday, not a Tuesday, but hey, I was out of the office yesterday, so let's get to it. You can see it right there, the chart in front of you. Used to have a couple of 4% on there, but now we are in the fives across the board. And unfortunately, and as you can see, the 30-year mortgage is creeping right back towards that 6% on average. Unfortunately, we're there. And we've been talking about it for a few weeks. We've been anticipating this, been trying to warn everybody this is coming. We are going to see 6%. We're going to go over that. We might even see that 7%, and it might happen before the end of the year. Don't mean to be the bearer of bad news, just preparing for what we should be all anticipating. This is the reality of where we're at right now. And as much as everybody's trying to spin the good news about inflation, hey, it's come back down a little bit, or it's going to be okay. Is it though? We're still well over 8% right now, and a lot of that CPI fall off, to be honest with you, has been about gas, oil prices. That's a big difference when you're thinking about what you're paying in gas and what you're still paying for milk and bread. Now, this is the time that I like being a broker, personally, because it gives flexibility. It gives a little more creativity. The retail lenders are very rigid, and most of them are just trying to throw a 30-year fixed mortgage at you. But now that this is here, the 5, 7, and 10-year ARM has become a lot more attractive. Bank statement loans have become a lot more attractive. The non-QM space becomes more attractive. And there's a lot of wholesale lenders out there, UWM included, HomePoint included, who are trying to win business. They are throwing low rates at everybody, trying to be as competitive, as attractive as possible against the retail lenders. And again, this is when I like being a broker. And buyers are coming back into the space. I've seen a big uptick in the past couple of weeks. And again, I know the rate's going up, but still the market is softening, right? Most of the time we're looking around, especially here in Los Angeles, we're seeing 5, 10, and 15% drop off on some of the prices of housing, depending on the inventory, depending on locale. Buyers are coming back in. They have a lot of questions. So personally, I like being a broker. I don't mean to be the bearer of bad news, but as the volatility hits, and it will continue to hit toward the end of this year and towards the beginning of next, we just got to pay attention. We just got to see what's out there, but we got to get a little more creative in the types of financing we're going to offer.